Okay, so anyways, going back to this and why I just feel ultimately that, charting ES or the futures ticker versus charting using the SPX or SPY, whatever it might be, you're not going to get that extra little layer. And here's what I mean by that. So after that candle, obviously we retrace lower into the new week open gap, and from there we start to bounce and we make our move, right? So even in this situation, this is a pretty clean trade, right? If you were to look at it, what can we see? Ready? Here's your gap, right? So not as precise as we'd like, but not bad. Retracement down into our bullish volume imbalance here, and run higher for buy side. Ready? So there it is. Okay. Now, if we were, and obviously we got the same move here, but one thing you're going to notice here is that look how much cleaner this breaker is here versus here. Okay. So you have your low, high, lower low. Okay. Your break above it, right? That price run. So the candle that we're going to be using for that breaker is here. There it is. There's your black. Okay. So just keep an eye on that for now. Okay. Now, if we're to do the same thing over here on SPX, ready? Here's your breaker candle. And look at the difference. Look how price retraces so perfectly back into the breaker on ES versus on SPX. For whatever reason it is, and to me, it's got a lot to do with the gaps, the lack of information that you have on these charts. It can really come back and bite you a little bit, in my opinion. Now, but anyways, we look at it from, okay, what was the price run that took out, because again, this is our focal point for tonight, how we're going to map the range. What was the start of the price run that took out that high here? Okay, so you can look at it from this perspective. Okay, so on this price run, and here's, for those of you who are questioning, ready? Is this the low that took out the high? Well, let's see. Is there a discount retracement? Nope. Has there been a discount retracement? Nope. Has there been a discount retracement? Nope, 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 nope. Right? And what I mean by that discount retracement is, was 50% tagged? No. Throughout that entire run there? No. So if we're to look at it from that, you'll notice that we look pretty clean here. But here's the difference. Here's your ES and what ES looks like versus your SPX. Again, look, it's just a level of cleanliness. It's just not as clean. Look at this retracement here down into discount. There's your bullish breaker that we hit. Look where we are here on SPX. Nowhere close. We didn't even get the discount before taking off and running for that high. So I know it was a little bit of a tangent there, but to me, even if you're trading SPY, even if you're trading QQQ, to chart on the futures, you're getting 23 hours of information 5 days a week, where on the Qs or SPY or SPX is even worse. SPX is, you're not seeing anything pre-market, whereas I know you get some data on SPY and Qs from 4 a.m. on, but I don't know, to me, I think oftentimes, more often than not, having that extra little layer is very, very helpful. Another example of that would be, let's say you get some sort of gap higher, right? Like we got today. Okay, so might not have been like the best really example. So here's where our gap was from earlier today, but rather than having this massive gap right here, at least here we know where exactly that bullish imbalance is going to be. So let me zoom here. There's your bullish imbalance. Okay, let me draw that in green. Right? So instead of just having this massive gap, at least you're a little bit more precise. Even if it trims off a couple points, those couple points could be the difference between you getting spooked and stopping out versus you not getting spooked or stopped out, right? And it's just the level of precision that you have. I mean, obviously the numbers aren't going to line up all that perfectly, but still, in terms of, obviously they're a much different price right now, SPX versus ES, but just the amount of points within this range, that could be a big difference. And again, let's say you're entering off the high of a gap, the bottom of that gap might be pretty far away, right? And who's to say that there's not an imbalance right at the bottom of that gap, right? You might get spooked, take your loss when you don't necessarily have to. And to me, that's a big difference maker. So, but anyways, just to kind of review from where we are, also another thing is, I think it's really important for people to take a look at previous day's price action and be able to almost continue that onto what you have on the day. I feel like once the new day starts, a lot of people kind of just leave the past information behind, and I think that's a big mistake. Using all that other information in the past can be extremely useful, in aiding in the decision-making process. So, but anyways, I mean, really today, unfortunately, you didn't really get all that many opportunity, and if you did, and what I mean by opportunity is something that's gonna like suit my trading model in a sense. So obviously you take a look and you'll notice, I mean, you can even map daily range. Okay, so your daily range being your low to your high, and this is obviously, it can change as the day progresses, and like we see here. But again, no 50% retracement, just like NASDAQ. Do you have a bullish fair value gap? So even if you said, you know what, I'm taking this bullish imbalance, screw it, I'll have my stop all the way down here. Well, your risk gets pretty greatly enhanced. In this situation, at least you have some sort of way to map this trade. Okay, enter off the high of the imbalance, stop loss below the low of the candle that created the imbalance, and look for the highs as my take profit. So, I mean, ultimately, like, that played out, sure, but it didn't really line up with my model, unfortunately. So really where we currently sit is something like this. Okay, that would be our range heading into the next day, aka tomorrow. Here is just a big volume imbalance, right? Again, it's going to look different on this versus what we have here on ES. We got multiple levels here on ES that we can use to kind of help us and aid in our decision. But by looking at this, it's one thing at least that's worth noting is that this range is pretty big too. So again, you'll notice what was the price run that started that took out this high right here, and it's from this low to, and go to every single red candle and see if that red candle brings you into discount. If it doesn't, then the range isn't set. Nope. 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 Okay. So we have a range. Not necessarily sure if this range is set. One thing that could give you a little bit of an advance on that would be we did form a bearish fair value gap right there. So by us forming that bearish fair value gap, oftentimes that's the indicator that this range is going to be set. And if that's the case, and the range is set here, we can anticipate a retracement back down into discount, which is, what is this, 11, 16 points away, right? And again, why would I even consider something like that? And the reason I would consider something like that is because, look, this whole trade can be mapped out. I'm not taking this trade, but I'm just telling you that this is all mapped out. Look, enter off the imbalance with your stop loss at the high. Look for a discount as your take profit, right? Like, it's mapped out. So even if you're wrong, you're not going to get absolutely smoked, right? For example, that's 2 points. You're risking 2 points for a potential 16. Does that make sense to you, right? So, to me, I don't care if I'm wrong. If I'm wrong a couple times, I'm fine with it because I know that loss is not going to be out of control. I'm not going to get smoked on it, and I'm going to be able to bounce back from that. If you start taking some crazy losses, I mean, even something as simple as this, right? You use this as your entry, and you say, you know what? As long as we don't get to this high, because I know if this high gets taken, we'll get a bullish market structure shift. You might even be reading it just a little bit off, right? But even by using that, you now enhance your risk another 4 points. That could be the difference between a couple $100. And if that's the case, that's when things can kind of snowball and get out of hand, right? But if you're precise with it and have everything mapped out prior to your entry, you're not going to sweat it as much as if you are wrong. So that's just my 2 cents on that. But let me go through some of these comments. And was that oh, you were on the 5-minute. You got cooked around one. We'll go back to SPX. Yeah, I can do Nike. Sure. Thought you can catch a reversal. Okay, so Casp, I'll show you what kind of indicates a reversal type move for me. Basically using same risk profile and entering near 70 to 62. Oh, okay, cool. Yeah, so Butch, he has his own rendition of my model. That's great. Everybody, eventually that's the goal for everybody. You don't have to use my model, but if you can use or you can put together multiple pieces of the things that you learn and be able to kind of create some sort of model on your own, right? Ryan, who I respect a whole lot, and Sean even as well. We don't trade the same way per se. We use the same concepts, yes, but our setup really, it's not the same, and it's fine. It's whatever makes more sense to you, right? So if after all of this, I was just talking with somebody last night, and they've been hooked on the breaker, that concept of the breaker, and they've kind of built their own model using the breaker as their strategy. Great. There it is. You're not trading, using my model, which is, it's fine. But you've literally been able to create your own from something that you learned using this idea of price reading, um, and then you can run with it from there. You can add in little bits and pieces. Maybe you say, oh, you know what, I've been back testing this more. This pizza doesn't actually work that much. I'm going to take that out. You got to kind of do trial and error to find like what really works for you. And ultimately it's got to be something that you can back test. To me, being able to go back and look at so many charts and just say, oh, okay, here's my model right here, boom, done, send it in. And by me seeing it over and over again, it's a positive for me also, not only to show you guys that you can find a repeatable model, but it just helps with the confidence in mind that it works still. Nothing changed with the algorithm just yet. Let's see, I trade ES. I use ES to trade SPX. Great. Trade 945-ish to 1130 and 130 to 4. Only take 330 lottos with portion of profit. Cool, yeah. I really haven't been trading after 3 o'clock a lot at all. Have I missed anything on Tesla? No, we didn't get to Tesla yet. We will, because I want to victory lap that. I got cooked for a while. Big shift was counter trend trading, yeah. To touch on this counter trend thing, I bet you Ryan would tell you the exact same thing. We always want to fade the popular consensus, but sometimes you're right, but sometimes you're definitely wrong. Think about all these people who've been trying to short this thing since October, right? Just getting smoked. But you want to fade that popular consensus. You want to fade the trend, and while I don't necessarily for example, if we're in this massive bullish range like we currently are and we see some sort of imbalance down, I'm not going to say to myself, oh, there's no way I'm shorting this thing. If I think price is going to go back down to 50% and I have an imbalance to work with to map the trade out, meaning I have my entry, I have my exit, I have my take profit all mapped out prior, I might take a stab at it, even if it is counter trend. But I'm not going to just jump and try and pick the top on a short. I'm not jumping in front of a moving train to try and short this thing until I get that imbalance down. And if we make the imbalance down and we don't retrace back into it and we dump, it is what it is. I miss it. But guess what? There's a million different tickers you can trade, so it's not all that big of a deal. Okay, I noticed that on QQQ versus NQ today, 15-minute. What was that, Goonie? NQ hit 50% retracement. QQQ did not quite make it. Yeah. Yep. The futures, man, I'm telling you, it's such a way more clean trade. And I know it stinks. I think you have to pay like $4 for live futures data. But to me, if you're somebody who's trading SPY or SPX, I think it's a no-brainer, really. Just having more information. You have 23 hours a day, 5 days a week versus your massive gaps that can occur, especially if you're looking at SPX. It's just and those gaps, we view the gaps as support or resistance, gap up being support, gap down being resistance, but we view that, that's great and all. And while price could get into that gap and take off, we don't really have that precise number, right? Or precise region where that imbalance actually formed. And if you have it on ES, you'll notice that pre-market you actually do get levels where, to me, I'd rather have a level than just a gap, because the high of that gap could be 20 points from the low, and if that's the case, that is difficult to trade. But I traded like 80% short today. Just got to be really careful. Kept on shorting after imbalances were created towards 50%. Got stopped in profit on all my shorts. Yeah, so you were fighting the bull train, but you were using that imbalance as your, kind of, compass in a sense, right? So even if you're wrong, you're not going to get smoked. And if you are going to get smoked, then that's a trade you shouldn't take, right? That's just the bottom line. If it's, if the risk is just way too high for what your potential win would be in that situation. It's just not even worth it, you know. And that's why sometimes I look at some trade opportunities, and while I think I can be right, and sometimes, most of the time I am, but ultimately, but if I'm wrong in a situation, I don't want that risk to be out of control, and that's why sometimes I just don't even take it. But let's see. Yeah, ICT said something that really helped me slow down. One tire. If I only lose one tire, it's manageable. Hey, you can deal with that, I guess, right? There are multiple fair value gaps in discount. Which one do you take? Okay, cool. Yeah, so let's go over here, and so here's the catch. Ready? So example, this in this one right here, we only have one, but we're moving on down here, right? So really, the way I look at it ultimately is, we have multiple here, right? This is not quite in discount, but really the way I look at it is, as long as we can leave one for what we would consider a breakaway gap, right? So the breakaway gap is just a gap that forms, or like a fair value gap that forms, that we don't come back and touch, right? So we could fill up all of this nonsense here and take off from that point, but ultimately the way I look at it is, I would prefer to get the lowest of the low. And what I mean by that is, if I can get this one, that's fantastic. And I know, okay, where would my stop be in this situation here? This is where it gets a little tricky, because your stop in this situation is the lowest bullish fair value gap. But that's the way I kind of manage with it. And when I was more trigger happy and trying to press the button much more than realistically I should have, I would slap every single one of these, just knowing that eventually my model is going to work. And when my model does work, whether it's this one, or this one, I'm not getting dragged under. I'll take my stop and then look for this price to retrace here, and then I'll do it again and come on down here and see. But ultimately, that's how I'm managing it there. And I'll even go to the hourly. Is there an hourly imbalance, right? So let's just see on ES if we have multiple or we just have one. Nope, same situation. We have multiple here on the hourly. NASDAQ only has one, so that makes it a lot easier. But yeah, no, I used to try every one, and again, my what's it called? My justification for that was, I know this works more often than not. So even if I take my stop outs, I know I could probably get stopped out 3 or 4 times, and one win erases that, and I probably end up green as a result of that. So, but looking at this right here, this one don't look too bad at all if we do get that retracement. And again, I'm not so sure. We tapped into here and we took off and took another high. So again, if you're trying to jump the gun without any imbalance form, you're kind of playing with fire. Even now, no imbalance is formed on the hourly, so it's kind of dangerous to try and jump in short, in my opinion, unless you're somebody who likes to trade off of, that's not even an order block. This is. So yeah, until that imbalance to the downside form, to me the range isn't set. And we can go through 100 charts, and daily time frame is more preferable because it's not as jumbled. But if you see the daily imbalance, typically that leads to the range setter. Ready? Here's an example. Wait, whoops. Okay. Ready? Where's your first imbalance? I'm sorry. Here's a, whatever. It is what it is. Here's a bearish order block. That kind of set the range for you. There's your low. Bang. Here's your little retracement. There's your goner. Oh, this is the weekly. I want to look at the daily. Whoops. I was wondering. I was like, there's not that many candles here. Okay, but here's your first example. Whoops. Here it is. Okay. Here's your imbalance. Okay, from the imbalance, we say to ourselves, okay, we're going to discount. There's your discount run. There's your rip higher. Here's your, second little, okay, here's a good example how I'm mapping the range here. Okay, we didn't necessarily take out any high. Okay, even still, well, let's see. Oh, shoot. Even still, I'm sure there were some hourly highs taken out there. Was there a 50% retracement here? Yes. So this is why I use the first green candle that moves up to set the range. Okay, that's why. If this didn't come to 50%, I would use this low. But the fact that it came down and touched 50%, to me, my model completes in that situation, and we move to our next high. Okay, But here's our next one. Here's your range setter. Okay, do we have an imbalance here? We do. There's your imbalance. There's 50%. There's your run through highs. My model completes again. So I hope that clears it up a little bit and makes it a little more, I guess, understandable. I didn't want to throw in all this extra, stuff that I didn't think really was all that necessary. But ultimately, even if you do fumble and you say you pick the bottom of the range versus the start of the price run, oftentimes the only difference you're going to see is that rather than getting into 79% discount, you're hitting 50 and bouncing, right? That's the only difference. A lot of the time that retracement is going to be bringing you down into that area regardless. Oh, Ryan, you took the that meta trade right there. Yeah, I don't know about those trend lines, but that is you formed the breaker there, and you took off. Now, really, meta, pretty much a low resistance liquidity run. If you look left from that point, you'll notice that while there was a bearish imbalance there, this is the last one you're really dealing with until that just below 490 buy side. You bastardized the Mando model. Do you use ICT's market maker buy or sell model? No, I don't. I think that's really just another one of his complicated things that doesn't really have to, I really don't think anybody needs to know that unless, that's the model that you want to use, or if you're searching for one. To me, the differentiator is oftentimes when you see turtle soup, so you see that low wick that sweeps liquidity, and you get that ripper from that point, oftentimes that's leading to expansion. So when you see turtle soup, or you hear turtle soup, somebody in the chat say it or something like that, just take note of it and watch it for yourself. But oftentimes that is the expansion, or your market structure shift from that point. So once you get that market structure shift, to me, that's the start of the buy model, and vice versa. It would be the same thing to the downside in terms of a sell model. So, so that's just my thoughts kind of on that. Simply put, must be after the book I recommended to you yesterday in the Bear Cave, Bitcoin. I don't know about Bitcoin, but all right, yeah, let's look at Nike here, and then if anybody else has any other stuff. But I just want to make sure that mapping the range, that makes sense to everybody, because that is very important. And again, while I'm showing you how I'm mapping the range, oftentimes I'm going like this. I'm saying, okay, the run that took out the high is here, and that's just because I'm seeing it from my lens where, okay, I know that this wick down hit 50%. So if it hit 50%, I'm not going to use that, right? But I didn't want to throw something that was unnecessary at you, but if it's needed, then, you got it now. But all right, let's go to Nike here. Look at that. Okay, so let me see. No problem, Goonie. I'm glad that clicked. And when you mark 1 hour frame, how far are you going? Can you show INH? Yeah, we can go INH, and I'll answer your question there as well. So, I mean, look, for Nike, it's kind of annoying, to be honest with you, and I'll explain to you why. So here's a great example, okay? Where am I mapping my range for this massive move on Nike, right? And let's see, right? So here's your low, okay? Was there a 50% retracement on that little red candle? Nope. Was there a 50% retracement on that candle? Nope. Okay. Whoa, big range, big range, big range, right? You see that there's no 50% retracement until here, okay? And by 50%, I should just say discount. I'm sorry, I'm saying 50, but that, to me, that's discount. So discount retracement. There it is. Okay, we got the discount retracement here, specifically the 79%. The fact that it held here is good news for bulls, okay? But if we look at it here, do we know this range is done? And hold on, I just want to map out some of these imbalances down here to, ready? And really, it should be here, but okay, here, ready? bullish fair value gap right there, untouched. Okay, let's see, bullish order block here, a lot of, so the bullish order block, again, not something that I really have marked on all my charts or anything like that, but it looks like that. Just for reference, again, every move that happens here, we should be able to justify no problem. But even here, right, I know that, so far so good on my model where you have your start of the price run that took out this low, so high. Why am I using that? Has there been a 50% retracement? Nope. Okay. Has there been a 50% retracement? Yeah, even better. 79%. There's your bearish fair value gap. There's your melter. So you're working with this bullish fair value gap right here. Ultimately, my model completes at 88.66. Does this imbalance kind of shift the trend? Because look, we can look at this from numerous different ways. This most recent price run, or I'm sorry, the most recent price run is technically bullish. So I'm going to show you all the different ways that you can look at this. And Kale, I'm sorry if I'm confusing you at all, but okay, we took out multiple highs here with this price run from low to high. Okay, let's just confirm. Ready? Is there a discount retracement on that red candle? Nope. What does that tell you? The range is not set. Okay, there's your retracement. Boom. There it is. Discount, bullish imbalance, decent. You got this here. Okay, but so if you're a bull, you could say, okay, well, we have a really higher time frame bullish trend, right? From 2020 lows to the highs of 21. There's your discount retracement, and making this higher low is pretty good. That keeps this structure dating back to last, what is this, 2 Octobers ago. That's still intact, right? So now if we look at it like this, you say, okay, well, we have an overarching bullish range, we have a smaller time frame bullish range, but what are we also working at in right now? Just to be fair, I got to throw it out there. That's a bearish range. That's 79% of that bearish range. Okay, so in this case, my model would complete down below the lows. I actually don't think that's going to be the play. I think actually you might see some upside. I don't know when earnings is, because to me earnings is just an excuse to help price get to where it's going anyways. And in this case, you have buy side here at 123 and then 131. And my model ultimately would complete at 179.10. But again, it's just the market is so fractal on how you can break this down, because again, here's your bullish run inside your bearish run inside a bullish run. Bingo, right? 79% right there. Cash. Okay. Inside a bearish run. Do we have 50% of this range? Bearish run. Okay. 50% rejection so far. Right? Inside a bigger bullish run. So it's so fractal. You can break this down into 100 different things. And when I get this many, usually that's when I'm like, I'm good. But to me, this imbalance, I mean, the way I look at this here is if you want to long this, your stop's 95.91, right? The low of the candle that creates the bullish imbalance. And, you're going to run into some resistance here at 109, but ultimately your targets here could be 123 and 131. Could it take some time? Yeah, you're dealing with a pretty fat imbalance right here. But, to me, I'm not really interested in trading this, to be honest with you, because I can kind of see it both ways too clearly. But, to take a shot on something like this, it might not be the worst idea. You have the trade mapped. And if the potential downside risk to you makes sense, then, is it worth it? It's different for everybody. But also should just label this. This is a bearish breaker right here. Let me split that black. And I'll show you why. High, low, higher high. Break below that low. So we haven't gone back up into it. Oh yeah, we did actually. After breaking it, there's your retracement into it, and there's your rejection. But haven't gone back to it since, obviously. But so that's Nike. Does that help at all? Nike, is that why it's getting tight with no liquidity being swept? Yeah, you could, one would say that. I don't know. Is it really getting that all that tight. I mean, this range is pretty fat if you look at it. Even from the smallest fractal, from 88 to 123, it's, you know, it's $40. But we are in discount of that, and it is pretty encouraging if you're looking at it from this perspective that you have your run here. There's your discount, and look how price is kind of slowing down and like almost like hovering over water prior to dipping its toe into the water before, you know, a potential move higher here. I'm just curious when earnings is, because I didn't play earnings directly. Let me just show you this one. It'll be quick, and then I'll get to the one that Vance had said. But yeah, so I've been buying shares of Enphase in this breaker. You know, my average isn't, you know, it's not tremendous. I am very green after the earnings report, but to me, it was something as simple as this. You know, add in this breaker, knowing that we did just shift market structure, right? And we have the breaker as confluence. Look what happened. Turtle soup. Whoops. Turtle soup explosion. Right now, I know that we're dealing with this. Ooh, pretty big imbalance here. But ultimately, if market structure is in fact shifted, I'm feeling good about that 139. And this is a bullish trend to me. So if that's the case, I'm going to look for higher prices. Here's the last missing puzzle piece here with Enphase. And I don't want to bore everybody, but this is the type of, you know, I don't want to say research, but this is the type of stuff that, or extents I'm going to in terms of identifying what long-term positions I even want to consider. And if you look at Enphase, ain't that something? Check that. Okay, start of the price run that took out that high from low to high, discount retracement into a bullish imbalance, and my motto would complete like this. Can it take some time? Yeah, this is a yearly chart, but feeling pretty good about it going back up there at some point, and that's why I figured accumulate here in the breaker, discount breaker, and ultimately I'm not going to be sweating this all this much, but that's just the. And I look at the yearly chart for a lot of stuff too. I mean, I don't bring it up all that much because, again, it's, to talk about the yearly, nobody really cares. I'm not like talking about long-term investments or anything, but here would just be another one, another high here. Although it got into it, we're not quite in discount just yet, right? If you're to use this still, right? Doesn't matter. It's still not in discount. So that's just the way I look at that as well. But yeah, that's how I'm using that, like really higher time frame stuff, and that's why I think, to me, if I'm gonna like park money in something, I want to vet this thing as much as possible, and that's why I looked as much into Enphase as I did. I don't, to be honest, I know this, you might say, oh, he's an idiot. I don't give a shit what Enphase does. I don't know I know they're solar panels, it says semiconductors. I don't give a crap what they do. This chart looks clean as hell. I'm gonna give it a shot. That's the way I look at it. I think this is all booked, predetermined, and if I can get a jump start on it while also manage my risk just in case it doesn't go my way, I'm going for it. So, but let me get over here. Earnings will be underwhelming. Yeah, but that's not to say anything. Look at all these other underwhelming. I'm pretty sure Enphase earnings were terrible, and we ripped $18 today. To me, I know you don't want to hear it, but the chart is there's a lot to learn from the charts. Should I buy more Nikes before then? I don't know about that. China's in a depression. I opened a nice Disney short today. We can look at Disney too, but let's look at the one that Vance had said. UNH, 1 hour. You got it. Okay. Alrighty. So here would be UNH. Let me just zoom out and get an idea. Just to be fair and just so I can be... Huh. Wow. That's something, huh? Okay, well, this is where we're currently at on the higher time frame on UNH, and just from looking at this right here, I would tell you that we have relative equal highs, 554, 558. I know it's $4 apart, but the fact that we did not sweep liquidity here, to me, tells me that price is probably going to come back up here and take that. Also, we have our low 2. Again, why would I use that low and not this one? Go to the red candle. Does the red candle come back down at the discount? Nope. So the range ain't set. And if the range isn't set, there it is. Whoa. And so far so good. So yeah, my higher time frame bias for this would be higher. So with that being said, let's look at the hourly time frame here. Where have we shifted market structure? Ooh, we haven't just yet. So this to me would be the draw on liquidity, and that would be your shift in market structure. If that's the case, okay, you can ask yourself, what was the start of the price run that did so? I kind of wish, let me just get the extended hours, and I'll tell you why in a second. But let's just see. We have a low, high, lower low. So a break above this candle right here, that would create your bullish breaker. Also, what would our range be? Start of the run that took out this high here would be from here. Good. Any discount retracements? I don't see them. So there is if it's to be a blow off type move, it would move higher obviously, but ultimately I'd want that breaker in discount so that when price does retrace into it, we can get up and go. That would be ideal from this spot. But what exactly was the question again? When you mark the 1 hour frame, how far are you going? Just really most immediate price run. I use the other higher time frames for that. It keeps it clean too. But for example, if I was to watch this, if I'm going to draw my range here on I'll draw in the weekly range on my hourly chart and just show you how you can kind of use that to anticipate. Okay, now we'll go back to the hour. We have our range set here. Okay, great. And let's see, was there an hourly imbalance to justify that right there? There's multiple. And an order block right there. But in terms of hourly, to me it is nice to know, okay, we're bullish on the hourly or something like that, Just go back with hindsight, we know. There it is. And there she goes. Deep discount retracement. I don't know if this was an earnings move or what. No, it was not. Just a puke. But, a break above that high and you get a bullish breaker. So, yeah. Alright, let's see what else. Yeah, it's a great eye there, Van said. Again, just for anybody still here, just worth noting that when you're looking at the weekly chart, it could take a while to digest and move. Okay, yeah, I'll wait for you guys to type. I see a few of you typing right now, but I'll just show you. This was my trade on Tesla from today. Obviously, I'm in Tesla anyways, but I had the regular trading hours on, so I was working with a gap. But I'll show you how I did it. Here, let's remove this. Not that. Let's remove just for now. So here's your gap open. And, obviously at one point it got really sketchy. We made this wick all the way down to this low. And at this point, we can look at it like this. What was the, price run that took out this high right here, for instance? So you had your 50% retracement, take off. Okay, so what was the range that took out this high here? And it was from low to high. Here's your discount retracement. Sloppy, but bullish imbalance. Then we get a retracement into the bullish fair value gap, and we took off for the highs. And once we hit this high, I sold most of them. I'm just going to run a few more because I think this is where we're going, to be honest with you. Hopefully tomorrow we get 193. That would be sweet. 196 would be really nice, but that's just the Tesla trade that I had today, why I took it and all that. And then here's Boeing. For those of you who are keeping up with the classroom, I literally sent this one the other day, and everybody said long, and guess what? We called price before it happened, right? So if you're struggling with doing it in the moment, guess what? We did it. And so far, so good. 214.57 completes my model. I got high hopes for Boeing. Just looking at the weekly, like that's real nice. Again, how long is this going to take though? That's the problem. So I'm thinking I can play this kind of the ups and downs of it and just scalp it that way, and buy far out contracts, but play it on an hourly time frame. That way, I can limit my risk, take my money, and ultimately I think it's going higher. So if that's the case, then I can stick with my little walkthrough. Your 1 hour Nike chart. Okay, so yep, we took out the high right there with that price run. You got it locked in. Good. Yeah, so 50% approaching. The 618 right there is nice, and then you have one more fair value gap below it. Ultimately I'd want that one to be a breakaway gap. But yeah, the breakaway gap, that's just telling, like, to me that's a signal that we're really bullish and we're gonna get into discount and get out of it. But yeah, that's great. Have one runner, just curious where it'll go. Expecting 550. That was UNH, right? Yeah, so my model completes at 554 with the relative equal high 558 above it. Just the hard part about it is how much time. That's always the biggest struggle of mine as a trader. I guess you guys have been in this group for long enough, and from what I've posted, I mean, I usually do it beforehand. So I would say that more often than not, the directional part of it's not ever the problem. If there is a slip up, it's usually just based on time and how long or how far out your contracts need to be. Like if I was just sitting here and saying, okay, I'm buying shares, like I wouldn't care, about how long it took. But if to make this like actionable and tradable for me, trading options, how am I going to do that? I need to figure out a way to make it actionable. And to me, you're just buying a lot of time on the contract, something I really haven't done all that much of until since I started swinging again, and it's been great. You have to cough up a couple more bucks, but to me, so far it's been well worth the extra money. But love the BA. Nice, yeah. LMT, yeah. I posted LMT this weekend too. That's LMT. Yep. So you have your. This is disgusting, by the way. I just want to let everybody know that. So if we were to zoom this out a little bit, I mean, this part maybe not as much. Okay, so why would I not use this low to start the price range? There's your discount retracement. You see what I'm saying now? For anybody who was curious about how I set the range, like I'm not going to just pick this low when we got that discount retracement. I'm going to go after that because my model completed on a smaller time frame. No 50%, good. Okay, here's the first time, bingo, winner. Okay, so if that's the case, then we would move to what was the price run that took out the high, and obviously we know these candles obviously were coming back to discount before moving higher. And there's your retracement, bing, goner. This is where it gets a little funky, and I'll explain why. So after this, right, model complete, look where we set relative equal lows, by the way. That came back down and got tagged. But check this. Model fails, right? High. Let's just see just for a sec if this. Oh, 50%. One more time. Sorry. One more time the model worked. And then, again, at some point, I bet you if we scroll over, oh, this was all-time highs. 3 drives higher. 1, 2, 3. Dump. But here's your where it fails. You make the imbalance down through. That's kind of a dead giveaway. If you're getting some sort of imbalance to the downside, you're probably going to lose. But there's your retracement. So what was the price on that did that? From high down to our low. There's your 50% retracement. There's your new low. Beautiful. Now this is what we're currently working with on the flip side of that. Okay. So while I don't think LMT looks all that bad, if it's going to shift back bullish at any point, it's going to be here. That's the way I look at it. And we turtle souped it, and that would also kind of indicate expansion like we talked about earlier. And expansion meaning run through a high. If we're to run through this high here, what do you get? Low, high, lower low, break above, bullish breaker. And that would kind of set the stage for higher prices. So, to me, I know the range is pretty big. Like if you look at it like 430 and really your loss isn't until 393, that could be like $40. So that sucks. But on the flip side of that, what's your potential upside here? You're looking at 479 at the least. And if you're just looking at it from a shares perspective where you're not worried about time, this could be a low for a really, really long time, maybe ever, who knows? That's just the way I look at it. But again, it's mapped out, well defined. Does the risk make sense? If so, it's a different scenario. But I mean, I'm looking at it even from this perspective, actually, because I'm seeing this here, and I'm just curious. Nah, no 50%. So there was no 50% there. So yeah, really, that's the spot. Gotta stay up here. Can confirm BA on point. Yeah, Boeing was nice. That one, it's tricky. Again, it's just the time is the only thing that I'm worried about. I'm not worried about the direction at all. Yeah, still have 2 weeks. Yeah, I don't know if I don't know if there's earnings or anything. It might not go up. What are we talking? $40 in 2 weeks. That's I'm not so sure, but I've never traded this ticker. But Team looked interesting. Oh, I saw you sent me this one, Kyle. Yeah, let's look at that. Okay. So really, what would be super bullish? Oh, I know this name. I kept seeing this all the time when the insiders were selling back here. But here, if we're to look at it from, let's just look overall. Did we sweep this low here? Ooh, no, we didn't. Huh. Okay, so we didn't sweep that low. Huh. I'm looking at this from here to... Hold on. Let's zoom in. We can walk this down from the highs really quick. Ultimately, like the all-time range is still bullish, but no 50%. No 50%. No 50%. No 50%. No 50%? Yeah. 298 would be 50% of the range. We know how price likes to get up there. That's your bullish fair value gap. In your most recent range setters here, you have high, discount retracement, new high. Okay, my model would complete there. Then you would have, all right, I'll just show you guys whatever it is, what it is. Discount retracement, bullish fair value gap, check, model complete. Here's your next leg, low, whoops, high, discount retracement, new high, model complete. This low to this high, discount retracement, model complete. Okay, and then here we turtle souped it. See that? I'll zoom in. Whoops. Turtle soup. Bingo, deeper into discount. If you zoom in really closely here, what do you see? Bullish volume imbalance and gonzo. So take out that high. Oh shoot. We got to come over here and do this real quick. Here's your... What was the start of the price run that took out really any high? So again, discount retracement, goner. Okay, so I would not be using this low. I'm going here. Okay, and let's see, same situation here even. So you can be even more precise with this. Check that. No discount retracement. Ooh, that sucks. Discount retracement here, up and through. A little sketchy, but and the reason why I say that is because look, if we were to come right here, I think this has got to get going in this imbalance or else. See, it's just I don't like doing this though. And this is a bearish breaker too. High, low, higher, high. So here would be, this is the candle to beat if we already get some sort of bounce. I'm a little torn on this one. But this should not be where the range is set. It should be here, and then from that point we got that 50%. So the range should then really be here, and we shifted market structure. What did we run into here? bearish order block, bearish volume imbalance. Here's another one, bearish volume imbalance. But 50% really isn't all that far away. I gotta look at this one a little more. Huh. This is the part. It's just, really when you look at it in using the run terminology or the idea behind the runs, I mean, this comes back to 50%. That's why I don't love it. And that looks great. I mean, but still, now your risk is 16 points for, I mean, it's pretty fat, 50. I'm going to have to get back to you on this one, Kyle. This one's a little, let me just add it over here. I'm curious. But this one's for you, Surface. I know we talked about this one a while ago. I still have it on the list. I've been keeping tabs on it, but so far so good on Tesla. I'm going to get into that bearish fair value gap at 196.36. That would be so awesome if that happens before the end of the week, but we'll see. I don't know. Let me just see. Yeah, I have a lot of Tesla cons. ExxonMobil. Yeah, let's look at Exxon. Yeah, by the way, SP, the one that you sent me was great. That was really good. So I haven't charted this one in a while, so forgive me for this. I mean, but look how it still plays out pretty good. But there's your bullish order block, which is good. There's your, oh wow, shite. Okay, so this is like, I don't want to say inverse, but this is like, the second, what's it called? A second option, I guess you could say, of the Mando model, where we're not playing the retracement per se, but we're waiting for a bullish imbalance to form in order for us to believe that the range is set, that we're going to come to 50%. And you got your bullish imbalance here, and we got into it, and so far so good. I actually bought not much, but just a couple of Oxy shares today, very similar to this, and I saw Warren Buffett bought some more. I think energy's got to get going soon. I've been keeping tabs on it, and it's been shite for a while, but hold on. Low, let's just see. Okay, no 50%, no 50%. There's your 50%, and then that's the completion of my model. So this is another annoying one. Ready? So what was the run that took out that high? There it is. There it is. One more time. Model completes up here. Now look, see what you notice, and that's why I have a bearish range currently mapped on this, because there it is. Bang, dumper through the low. So that's a failure, but that don't look so bad. Bullish order block out of a big weekly imbalance. This might even need to call in the big dogs. Let's see the monthly, because the monthly range could be bullish while the weekly's not. I don't know, man. I'm looking at this. Let's just see. Oof. I mean, oof. I don't know. I mean, I think you're thinking long, and I don't think that's a terrible idea with that bullish imbalance. And again, it's all mapped out for you. Close below the low, you're done. But although your range here, you're kind of risking a little more than what you could potentially make, I guess. But I don't know. It's not too bad. All right, these are my last three. Ready? NEM. Ooh, why can't you just take this low? Take that low and let's go. How about that? If we take that low, there's your runner. Hold on. no 50%, no 50%, 50% up and through. Yeah, so you do have a bearish structure on this. There's your failure. Okay. Whoops. High. Whoops. It started the run all the way down to here. No range setter. So I'm thinking you might be onto something where we sweep that low and you might have a range setter because you also have this. Whoops. Bullish fair value gap right there. And a bullish volume imbalance right here as well. If it leaves these equal lows, that's terrible. Just come on down like another buck. Not even 65 cents. Sweep that and then, because then you can get a breaker. Low, high, lower low. Take out that high and you're looking gold into 59. So that's not a bad one at all. What is this one called? NEM? Newmont Corporation. Okay. Nice. Okay, I know you had Disney. Disney annoyed me. I mean, look, yeah, I've had this for a while, but guess what? No entry. Why? No discount. See how annoying that is? Hold on. I don't know why it's there. It should be here. See? No discount. Sucks. Held on to this one for dear life. Showed that the range wasn't set. Continued higher. I know you went short on this, but I think it's going to go to 103.91. And then you have your bearish volume imbalance here. You also have that buy side liquidity there. I really would like to get an opportunity, but it didn't come. You know, bottom line, it didn't come. So I don't know if I would mess with that one. Let's see, UPWK. Oh, Ryan's here. What's up, Ryan? It had earnings already. Disney did, right? Check the 4-hour on Disney. Hold on, let me just do a blank chart because I still have all these lines on here. Let's do 4-hour. Ugh, look how disgusting this is. Ugh, get this off. Teddy broke onto my trading view and put the volume on. Okay, 4-hour. Yeah, no, Ryan was going short, or he went short on Diz. Alright, well, obviously. Did we oh, we didn't clear this just yet. Hold on, where is it here? We didn't clear this just yet. That's a bearish volume imbalance. Let me just see where did things go wrong here? So we took out that low. What was the price run that did it really? I mean, we've kind of shifted down here, which is good for bulls in this situation, but where's Ryan? You can just type it in. What do you see on the 4-hour? Just this volume imbalance here? Or? You just type it. And then I'll get UPWK out. Oh, we did this one too. Huh. It's annoying. Sometimes I don't even stay on top of the ones I should, but low, high, discount retracement, dub 05. So really your range now is looking like that. Not bad. So 50% on UPWK. This is a cheap one too. I'm just gonna set an alert for 50%. Create good. What's the all-time high? Oh my gosh, are you kidding? Obviously no 50%. I know that just by looking at it. There. Whoa.